Hello and welcome back to our course on capital budgeting and analysis. In this section, we are going to talk about sensitivity analysis. Basically, sensitivity analysis helps analysts and senior management to take a better and more informed decision. It shows the impact on a dependent variable resulting from changes in one or more independent variables at a given point in time. In this case study of capital budgeting analysis, our net present value is the dependent variable because the degree to which the net present value can change will depend on other factors or independent variable such as the weighted average cost of capital of the company, the sales growth rate, the net working capital investment, and the cost of goods sold. So the general idea about sensitivity analysis is how the output of a given process will perform given our inputs. Let us make a practical example in our spreadsheet. To make a practical example of sensitivity analysis, we are going to need certain inputs, the first of which is going to be the total after-tax cash flow. Let us extrapolate the total after-tax cash flows from our evaluation sheet. We are just going to pinch and pull right up to the end. Our next variable of interest is going to be our weighted average cost of capital, which stands at 12%. Next to be calculated is going to be our net present value. Our net present value requires firstly the interest rate, then we are going to include all the total after-tax cash flows from the first year right up to the 7th year. Then we close our bracket and we add our initial investment. This gives us our net present value. Next to be calculated is our internal rate of return. Our internal rate of return basically requires us to extrapolate all the values of our total after-tax cash flows from period 0 right up to the last period. Now let us determine our sensitivity analysis. We are going to label this part as the weighted average cost of capital, and we are also going to label the next part as a net present value. Given that our net present value is the dependent variable, we want to see how our net present value is going to vary given changes in the independent variable, which in this case is our weighted average cost of capital. Let's vary the weighted average cost of capital from 8% right up to about 32%. We just pinch and pull that right up to the 32%. Our variable of interest here is going to be the net present value. We just get that figure out of there. Now to determine our sensitivity analysis, we are just going to copy all the figures right up to the last. Then we move to our data. From our data, we move to what if analysis. From what if analysis, we choose data table. Then we realize that we are supposed to fill in two inputs. Now we should note that our sensitivity analysis in this situation just have one dependent variable and one independent variable. Here we are being asked of the independent variable, and our independent variable in this case is a column which comes as the weighted average cost of capital. So we just extrapolate the weighted average cost of capital, which stands at 12%, and we press OK. We have a series of net present values for every given change in the weighted average cost of capital. Let's just make this look a little bit presentable. It is always a good practice to present your result from a calculation on a graph. A graphical representation of any calculation helps tells you the story more than just the numbers. Let us graphically represent our results. We just copy our results from the first right up to the last period. Then we move to insert. We go to charts, scatter charts, and we have a chart. Now let us just make this a little bit presentable. From the graph and from our table, we can easily realize that our net present value keeps on decreasing as our weighted average cost of capital increases. This happens right up until where we have a weighted average cost of capital of 27%. At this stage, we realize that our project is not going to be profitable. Hey there, if you've watched this video up until this point in time, I guess that's because you're interested in becoming a financial modeler a finance or business analyst, or probably you're already in the finance field and would love to take your career to the next level. We want to invite you to check out the other free parts of our courses provided in the links below. And if you're ready to become a world class in the finance and business world, we cordially invite you to take advantage of our discounts. By using the coupon codes below, you have complete access to our courses on financial modeling, where you learn how to build financial models from scratch. Then you will also have access to our capital budgeting course, where you learn how to value the different types of capital budgeting projects or investment projects. In the same course, you also learn how to build a capital investment model from scratch. Still, in the links below, you have access to our weighted average cost of capital course, as well as our Excel crash course for finance and business analysts. Thanks very much, and don't forget to hit the like button.